Well, if you've lived in the Charlotte area for a while, or maybe if you haven't, we're certain you know about the real estate market here. It's booming right now. The market is among one of the hottest in the country. In fact, last month's home sales, though, actually took a dip. So why is that? For the answer, we're going to bring in our guest today, David Kennedy, president of Canopy Realtor Association. So, David, thanks for being here to talk about this. I know real estate is top of mind with so many people right now, whether people are renting, the high cost for renting, maybe they're looking to buy a house. First, let's dive into the topic at hand. Why are home sales just a little bit down? Is that typical for fall?
It is actually. So it's a great question. So real estate has a seasonal or a cyclical cycle where things start to shut down a little bit, and that is it's rooted in the fact that, particularly in single-family homes, moms and dads don't want to move in the midst of a child's school year. So you get a tremendous amount of activity in the summer months, and it begins to slowly wane in the autumn, and then almost grinds to close to a halt in the winter as people choose to celebrate the holidays and travel in those November and December months.
So that perfect lead into my next question. If I'm thinking about selling my house, when's the best time to list it? Would it be January, or is that too soon?
So let's look. As you approach it, the first thing you need to do is just kind of get the advice of a realtor. And what they're going to tell you is that right now, there are about 50 people per day coming to Charlotte. And so while traditionally November and December are not the hotbed markets, because of the demand that is coming in on a daily basis to our area, if you do list your property for sale in November, December, you will have buyers out there bidding for your property.
Well, let's talk about prices now, because that seemed a little bit out of control. Great news if you're selling your home. I mean, people were getting 10, 20, 30, 40, 50,000 above ask and crazy due diligence money. So that just doesn't seem sustainable. Is it going to continue into the spring?
Well, the key mechanism, so your question is outstanding, because the monetary policy of the United States government is thinking just like you. What they're doing to try to help buyers is provide record low interest rates. So as those average home prices begin to accelerate and get even more higher, what we do is we offset that by the low interest rate. So that really all you're doing is paying a higher basis for the home that you're buying. Your monthly service of that mortgage is manageable due to the record low interest rates.
So this is good news for all the mortgage lenders, and it's good news for anybody selling a house. But is it really good news if you need to buy a house, because you still have to come up with a fairly sizable down payment, and a lot of people just can't do that right now? Inflation's creeping up.
So a lot of people, there are probably, I think 45% of all the potential buyers out there could qualify for the average home price if they had a down payment assistance. And so down payment assistance can come in the form of, secondary mortgages. If you're wealthy and you use down payment assistance, we usually call it a second mortgage, or you get a mortgage off of a property you already own. If you're not wealthy, you can get it from an organization like FHA, VA, things of that nature. But you do raise a good point. Affordability is what is something that is challenging here in our market, and the lack of inventory really drives that affordability up, because whatever is available, people are outbidding themselves. So if you're in that lower quartile or lower percentile of home ownership, it's really tough to get on that first rung of the home ownership ladder.
All right, one final question for you. I used the word unsustainable there a moment or two ago, but let's talk about the difference between this real estate market and what we saw in the early 2000s, because it was a different, the fundamentals were different back then.
Yeah, so here's the difference. In 2007, 8, and 9, during the recession, there were not the ready, willing, and able buyers that we have today. In other words, those people back in 7, 8, and 9, they went through short sales and foreclosures. It was a financially distressful situation where they no longer qualified for a mortgage. Right now, you have, in this year alone, 5 million millennials who are going to turn 30. They've paid off their student debt, and they're ready to own their own home. That's going to repeat next year and the year after. So in 2023, you're going to have 15 million millennials ready, willing, and able to buy. So that's the main difference, the amount of ready, willing, and able buyers in this market compared to the last one in the recession.
Well, David, all good points you're making there. We appreciate you coming on and talking about the housing market because it's a topic, whether you're looking to buy or whether you're looking to sell, you've got skin in the game. So thanks. We appreciate it.
My pleasure. It was an honor to be here. Thank you, sir.
All right, take care.